Hi, and welcome back to another episode of Just for Funds. I'm your host, Gabby Vennitti, and today I'm joined by Josh Olszewicz. He's the VP and Head of Trading at Canary Capital. So great to have you back in the studio.
Gabby, thanks for having me.
Of course, and I know today we're here to talk about the Canary Staked Sui ETF, ticker SUIS. Can you tell us a little bit more about the ETF?
Sure. The Canary Staked Sui ETF is designed to give investors exposure to the SUI token, along with the native staking yield that accrues on the network. And that happens automatically into the net asset value daily.
And so can you talk a little bit more about why you're choosing to launch it now?
Sure. We're seeing a growing demand from institutions to get exposure to crypto networks, as well as exposure to not just price direction, but also network economic activity, which is, again, part of the staking package that comes along with the ETF.
And I know you touched on it a little bit, but what makes staking so central to the investment thesis, and why is it so central for this ETF?
Sure. So as opposed to just being purely speculative or price driven, the ETF is able to tap into this economic activity of the network and, again, accrue rewards of the network into the net asset value of the fund. And at that point, it goes beyond just a speculative investment and allows investors to tap into the non-directional component of crypto and introduce a new type of income into the portfolio.
And getting more into the network, as you mentioned, what makes the SUI network so different from other layer one blockchains?
Sure. Well, first, a layer one network, for those who may not know the jargon, is specifically referring to the architecture of the protocol where the transactions are approved, validated, and incorporated into the blockchain. Layer one networks are also able, most of the time, to house decentralized applications or dApps. Ethereum would be another example of this, where you can put a bunch of stuff on top of the network itself. So SUI is also a little bit different than other blockchains in that it has parallel transaction processing. So instead of just processing transactions sequentially, it is able to quickly process a bunch of different types of transactions all at once. And this is great for consumer-facing applications where you need low transaction costs and high speed, and that way you're not bogged down by Ethereum, for example, again, to point out to that one, in contrast, transaction fees typically are very high for Ethereum when there's a bottleneck in dApp activity, whereas on SUI that has not been the case.
And digging a little bit deeper into operationally, how does the staking work for this ETF?
Sure. So operationally, we handle all of the staking components for the investor. So again, this is like taking it out of your hands. You don't have to deal with all of the staking fun stuff that native crypto folks do. We select institutional grade validators, a diversified set of them. We choose how much stake to send to each validator, and we monitor that daily, obviously. And we also have to make sure that the liquidity needs of the fund are met for the creation and redemption mechanism each day.
Yeah, and where could a ETF like this, like SUI, that is staked, fit in an investor's portfolio?
Sure. So again, it goes beyond just purely price speculation and introduces this yield-ish income-generating component, whereas most of the time, crypto is just focused on directionality. This allows for a similar type of investment profile as a bond, dare I say, something with a yield component that's just not sitting there hoping number go up, but also giving you this native income component.
Thank you so much for joining us back in the studio. Really great having you again here.
Absolutely. Thanks, Gabby.
And that was Josh Olszewicz from Canary Capital talking about their ETF, ticker SUIS.